Hey everyone, welcome back. Today we're going to be tackling something that I think is on the mind of a lot of entrepreneurs.
Yeah,
Getting your business ready to sell.
you're right.
It's that dream exit we all hear about. But what does it actually take to make that happen?
Well, it's a lot more than just, finding a buyer and signing on the dotted line.
Right.
A really crucial step is something called pre-due diligence,
Okay.
which is essentially giving your business this comprehensive health check before you let potential buyers start, poking
Oh,
around.
I like that. So it's almost like you
Yeah.
wouldn't, sell your house without fixing that leaky faucet
Yeah,
or sprucing up the landscaping a little bit. So
exactly.
you want to get your business in tip-top shape before you show it off.
Yeah, you want to attract the best offers and avoid any nasty surprises during the negotiation.
Right.
So yeah, it's about proactively addressing these potential issues that could derail a sale
Yeah.
or really impact the price, uncovering those hidden skeletons in the cupboard, if you will.
Ooh, skeletons in the cupboard.
Yeah.
So, what kind of skeletons are we talking about here?
Okay, well, imagine a buyer discovers a messy shareholder structure, right, with unclear ownership percentages or, God forbid, incomplete company records that can't really support your financial claims.
Right.
These issues can raise serious doubts about the stability and legitimacy of your business.
Yeah, that'll definitely scare some buyers off, for sure.
Yeah.
So, where do we even begin with this process?
Well, a great resource is something called the Devant Guide,
Okay.
which kind of breaks down pre-due diligence into 7 key areas that buyers will scrutinize.
Okay, 7 key areas. Let's go through them one by one.
Okay.
What's at the top of the list?
So the first area is share capital and company records.
Okay.
This is all about making sure your shareholder agreements are airtight
Yeah.
and your company registers are all up to date.
Right.
And that your record keeping is impeccable.
Right.
You're proving you run your business professionally and transparently.
So even minor inconsistencies, like if you're missing some meeting minutes or, shareholder information is out of date,
Absolutely.
that could be a red flag.
Yeah, it makes them question, how carefully you've managed other aspects of the business.
Got it.
So meticulous record keeping is a sign of good governance, and it just inspires confidence.
That makes sense.
Yeah.
Okay, so what's the next thing that buyers are going to be looking at?
Okay, so next up is contracts.
Okay.
This is critical because it impacts future revenue streams.
Right.
So they'll be reviewing all your customer and supplier contracts.
Okay.
Paying close attention to contract length, termination clauses.
Right.
And anything that could affect revenue projections.
So they want to see that the company has solid contracts in place.
Yes.
Especially long-term agreements
Especially
that guarantee a steady stream of income.
Exactly. Buyers are particularly interested in what's called annual recurring revenue,
Okay.
which is essentially predictable and recurring income.
Got it.
So long-term contracts with good, reputable clients
Right.
really demonstrate that revenue stream is stable and likely to continue after the acquisition.
But on the flip side, if there are contracts that have unfavorable terms
Oh, yeah.
or potential breaches, that could be a major red flag.
Absolutely. If a key customer can just easily walk away after the acquisition,
Right.
or if there are unresolved disputes, that really impacts the value of the business.
Yeah, makes sense.
Yeah, they want to see that contracts are, well structured.
Yeah.
They're enforceable and contribute to a healthy financial future.
Right. So you're showing them the money's going to keep flowing even after they take over.
Exactly.
What's the next area we need to tackle?
So the third area is accounts, finances, and tax.
Okay, the money stuff.
Yeah. So clean and consistent accounting practices are really crucial here.
Got it.
Buyers are going to scrutinize your financial statements.
Okay.
They're analyzing revenue streams,
Right.
cash flow, and looking for any potential liabilities that could impact their investment.
So no funny business when it comes to the accounting.
No creative accounting tricks or, skeletons.
Yeah.
Transparency is key.
Right.
Buyers will have their own financial experts kind of poring over your records. And any inconsistencies or attempts to manipulate the numbers are going to be spotted very quickly.
Right.
Don actually shared a case study.
Oh, really?
Yeah, where a company lost a buyer simply because their revenue recognition method didn't align with the buyer's accounting practices.
Wow. So even something as seemingly technical as revenue recognition can make or break a deal.
Absolutely.
That's crazy.
It's a big deal.
What else should we be aware of when it comes to financials?
Well, they'll also be assessing your financial health by looking at key metrics like your profitability margins,
Okay.
your debt to equity ratio, and working capital.
Okay.
They want to see a business with a solid track record of like financial stability or growth potential.
So it's not just about showing profit.
Right.
It's about showing that you have a responsible and sustainable financial strategy.
Exactly.
Okay, cool.
So now moving on to area number 4.
Okay.
Assets, IP, and IT systems.
Okay. The tech stuff.
This involves taking stock of everything your business owns, from tangible assets like, equipment and inventory,
Right.
to intangible assets like software,
Right.
intellectual property, and data.
So as a tech company, for example, I need to make sure that all my software licenses are in order.
Exactly.
Trademarks are registered.
Yeah.
Data is securely stored and managed.
And you need to be really aware of how you're using any open source software.
Okay.
The guide mentions a software company that had to revamp their entire client agreements.
Wow.
Yeah, because they accidentally misused open source software, and it almost derailed their sale.
That's wild.
It's a big deal.
Yeah, that's a good reminder that even the technology we use can have legal and financial ramifications.
For sure.
Yeah, we'll have to dig deeper into that a little bit later. But for now, what's the next area buyers will be looking at?
Okay, so area number 5 is company property.
Okay.
If your business owns any property, so whether it's a factory, an office space, even a warehouse, buyers are going to be really interested in all that related documentation.
Got it.
So leases, titles, permits, and any potential issues that could impact the property's value or use.
So even if it's a small office space, I need to have all my ducks in a row.
You got it.
When it comes to property documentation.
Yeah, any property-related issues or delays can really impact the sale timeline.
Right.
And even raise concerns about the overall management of the business.
Got it. So what's next on our checklist?
Okay. So moving on to area number 6, we have litigation and disputes.
Okay.
Disputes are common in business, but buyers are going to be wary of any ongoing litigation.
Right.
Or unresolved legal issues.
Makes sense.
Even settled disputes can raise concerns if the underlying problems haven't been adequately addressed.
So it's not about just sweeping past issues under the rug.
Right.
It's about demonstrating that you've handled it professionally fairly and there's a clear resolution.
Exactly. Buyers want to see that you've been proactive in managing these disputes and that there are no lingering legal liabilities that could come back to bite them after the acquisition.
Makes sense. Minimizing the risk for the buyer.
Exactly.
Showing them that the business is legally sound.
Yes.
Okay, what's the final area we need to consider?
Okay, so the 7th and final area is management and employees.
Oh, the people.
Yeah. A strong management team and a skilled, loyal workforce are huge assets to any business.
Yeah, for sure.
Buyers will want to assess the quality of your leadership, the stability of your workforce, and any potential liabilities related to employees.
So they're not just buying a product or a service, they're investing in the people
to
make it all happen.
Yep.
So what kind of things are they looking at specifically?
So they'll be reviewing employment contracts, compensation packages,
and any potential issues related to, employee benefits or compliance with labor laws.
Okay.
They want to see a stable and motivated workforce that's going to continue to drive the business forward after the acquisition.
Makes sense.
Yeah.
So it's important to have those clear agreements,
yes,
competitive packages, and a positive work environment that makes people want to stay.
Yeah, absolutely. A high turnover rate or unresolved employee issues can be huge red flags.
Yeah, I bet.
They want to see that the business has a strong foundation for future growth.
Right.
And that the workforce is a valuable asset, not a liability.
Right. Makes sense. Okay, so we've covered a lot of ground here with these 7 key areas.
Yeah.
But earlier you mentioned a software company that was facing issues with open source software.
Yes.
That really caught my attention. Can we unpack that a little bit?
Absolutely. Yeah. So open source software is becoming really common in businesses of all sizes.
Right.
But many companies use it without fully understanding the licensing terms.
And that can create unexpected complications during a sale.
So it's not as simple as just downloading some free code.
Right.
And using it however you want.
Not necessarily. Some open source licenses require you to make your own source code publicly available.
Oh, wow.
If you incorporate their software into your product.
Interesting.
Others might restrict how you can modify it, distribute it, or even commercialize the software.
I see how this could be a problem for a buyer.
Yeah.
Because they might not want their newly acquired software to suddenly become open source.
Exactly.
Or have these weird licensing terms.
Right, and that's why pre-due diligence in this area is crucial.
Yeah.
You need to meticulously review the licenses for any open source software you're using.
Okay.
Ensure you're fully compliant with the terms.
Right.
And document everything really clearly to demonstrate to potential buyers that there are no hidden risks or legal entanglements.
Okay. So it's not about avoiding open source software altogether.
Right.
It's about being smart.
Yes.
And informed about how you're using it.
Precisely. Open source software can be a valuable resource, but you need to be diligent about understanding those licensing terms. Right. And ensuring your usage aligns with those terms and the expectations of potential buyers.
Got it. Okay, so open source software, definitely something to watch out for.
Yeah.
But the dog guide also mentioned generative AI as a potential area of concern.
Yes.
So what are the implications there?
Well, generative AI is like a game changer in many industries.
For sure.
But it introduces this whole other layer of complexity when it comes to due diligence, especially regarding data protection, copyright, and ethical considerations.
Can you give us an example of what kind of issues might come up?
Sure. So imagine you've developed this cutting-edge AI product.
Okay.
It's trained on a massive data set.
Right.
Buyers are going to want to understand the source of that data, how you obtained it, and whether you have the legal right to use it.
Right, of course.
Especially if it contains personal information or copyrighted material.
Okay, so data privacy and intellectual property rights are big considerations when it comes to AI.
Huge.
So what steps can companies take to mitigate those risks?
Well, one crucial step is conducting something called data protection impact assessments.
Okay.
Or DPIAs.
DPIAs, got it.
Which is a process for identifying and minimizing data protection risks associated with using personal data.
Okay.
So it involves mapping out how you collect, store, use, and share data. Assessing the potential risks to individuals' privacy and implementing measures to mitigate those risks.
So it's a pretty comprehensive process.
It is.
What else can companies do to ensure that they're using AI responsibly?
Well, transparency is key.
Yeah.
Buyers will want to see that you have clear policies and procedures for data governance.
Okay.
That you've obtained informed consent for data collection.
Right.
And that you have really robust security measures in place to protect sensitive information. You also need to be mindful of potential bias in your AI algorithms.
Oh, interesting. Okay.
And take steps to ensure fairness and avoid discrimination.
So it's about having a responsible and ethical approach to AI.
Exactly.
Not just focusing on the technological capabilities.
Right. Buyers are increasingly savvy about these potential risks and ethical considerations associated with AI.
Yeah.
And they'll be looking for reassurance that you're using AI in a way that aligns with legal requirements and ethical principles.
Right. So it sounds like pre-due diligence for AI can get pretty complex.
It can.
Involving legal, ethical, and technical expertise.
It does, but it's an essential investment to protect your business and instill confidence in potential buyers.
Right. Okay. So going back to the broader benefits of pre-due diligence.
Yeah.
It's important to remember that it's not just about preparing for a sale.
Right.
It's about improving your business overall.
Exactly.
Okay, what do you mean by that?
Well, by going through this process of really scrutinizing your business, you're likely to uncover areas for improvement that you might not have noticed otherwise.
Interesting.
This could involve streamlining your financial processes, strengthening your contracts, optimizing your IT infrastructure, or even just improving employee morale.
So it's like a comprehensive business audit.
It is.
That can help you identify weaknesses and opportunities for growth.
Absolutely.
Whether you're selling or not.
Exactly. It's about taking a proactive approach to identify and address potential issues before they become big problems.
Yeah.
It's about building a stronger, more sustainable business that can thrive in the long term.
When we started talking about pre-due diligence, it sounded kind of daunting.
Right.
But the more we unpack it, the more I see it as an opportunity for growth and improvement.
It's a great way to look at it.
Yeah.
Pre-due diligence isn't just about checking boxes for potential buyers.
Right.
It's about investing in the health and future of your business.
I love that. Okay. So I want to bring our listeners into the conversation here.
Okay.
Have you ever considered selling your business?
Yeah.
What are your thoughts on pre-due diligence? What aspects of this process seem the most challenging or surprising to you?
Yeah, think about that for a second,
Yeah.
because I want to add one final thought here.
Okay.
We've focused a lot on the practical and financial aspects of
Right.
selling a business,
Yeah.
but there's also this really important emotional component to consider.
That's a great point. You've touched on the emotional aspect a couple of times now.
Yeah.
And I think it's so important for our listeners to really grasp this.
It's more than just, signing papers and transferring ownership.
Right.
It's about transitioning out of a role that has likely consumed, a significant part of your life,
Oh, yeah.
your identity. Even
Yeah.
many entrepreneurs pour their heart and soul into their businesses.
Absolutely.
So letting go can be a real emotional roller coaster.
I imagine there could be a sense of loss, even if the sale is successful.
Absolutely. It's like closing a chapter
Yeah.
in your life.
Right.
One that might have been filled with challenges, triumphs, and everything in between.
For sure.
It's important to acknowledge those feelings and allow yourself time to process them.
So what advice would you give to entrepreneurs who are grappling with these emotional complexities?
Well, first and foremost, be honest with yourself about your reasons for selling.
Right.
Are you seeking financial freedom?
Right.
Are you burnt out and ready for a change?
Yeah.
Are you looking to pursue a new passion? Really understanding your motivations will help you navigate the emotional ups and downs of this whole process.
So it's about aligning your decision with your personal values and goals.
Exactly.
Not just focusing on the money.
Right. And once you have clarity on your why, envision your life after the sale.
Okay.
What do you want to do with your time?
Uh-huh.
What brings you joy and fulfillment? Having a plan for your next chapter can really make the transition smoother and more purposeful.
So it's about creating a sense of excitement for the future.
Yes.
Rather than dwelling on what you're leaving behind.
Precisely, selling your business can be a catalyst for personal growth and new beginnings.
I love that this has been such a thought-provoking conversation.
It has.
I think we've gone beyond the typical advice on due diligence and really explored the human side of selling a business.
I agree. It's important to approach this process with both a practical and an emotional lens.
Absolutely. And to our listeners, we hope this conversation has given you valuable insights and encouraged you to think deeply about what selling your business would mean for you, both professionally and personally. Remember, success isn't just about the bottom line.
No.
It's about aligning your business decisions with your values and aspirations.
Absolutely.
And to our listeners, we hope this conversation has given you some valuable insights and encouraged you to think deeply about what selling your business would mean for you, both professionally and personally.
Yeah.
Remember, success isn't just about the bottom line.
No.
It's about aligning your business decisions with your values and aspirations.
Absolutely.
Thank you so much for joining us today and sharing your expertise.
It's been my pleasure.
And to our amazing listeners, thank you for tuning in. We'll see you next time for another insightful exploration of the world of business and beyond.